Crypto trading is exciting, but without proper risk management, it's like walking a tightrope without a safety net. In this video, we'll show you how to protect your capital and grow it smartly. Let's say you start with $500. The golden rule is, never risk more than 2% of your capital per trade. That's just $10. Trade with around $100 and target a profit of at least 15. That gives you a solid reward to risk ratio. If the trade fails, you only lose $10. If it works, you gain 15 or more. And if the setup looks weak, exit early. Capital protection always comes first. As your capital grows, lower your risk. At $4,000, reduce risk to 1%. That's $40 per trade. Trade size? Around $400. Once you hit $10,000, scale down risk even further, just 0.5%. You're risking only $50 per trade with trade size around 500. That's how pro traders stay consistent through ups and downs. Let's recap. Risk small, grow big. Always protect your capital. Scale smartly as you grow. Aim for high reward to risk ratios. That's how you win the long game. If you found this helpful, hit like and subscribe for more practical trading tips. Trade smart. Stay safe.